U.S. pharma company Moderna has seen its stock drop about 50% in the past year. Now, the shares are up a little bit today. The company is talking about cost cutting. Our guest has a neutral rating on the shares. We're joined by Geoff Meacham, Managing Director in Biotech Pharma Equity Research at Citi. Geoff, thanks very much indeed for joining us.
Thanks, Andrew, for having me.
Moderna, of course, famous for its COVID vaccine. Is that still a huge part of its business?
You know, it is. I think the narrative has shifted, though. First, it's mostly shifted to cost cutting. You know, how much money can they pull out of operations to still maintain this 2028 break even? And then they've moved on to oncology and rare diseases as kind of the next drivers of the mRNA platform, for sure.
Right. You have a hold. I think for one thing, you think their research on cancer treatments is going to take quite a while to bear fruit.
That's right. So they have an alliance with Merck, which is really a huge positive. They have very good data going back to a few years ago on melanoma, but it just kind of take a little bit of time to expand the number of diseases, tumors that the platform could treat. But I think we're long-term optimistic.
Right. And one interesting thing here is that apparently their newest COVID vaccine is being made in Canada. Can you give us some background on that?
Yeah, I think as the company went through the whole COVID process, they managed to improve efficiencies and operations. And so I think that was just part of a natural kind of determination, right, of what regions can deliver the most cost savings or maybe have the highest ROI. But I wouldn't, read too much into that from maybe a tariff perspective at all.
Right. Apparently, one thing that has hurt COVID vaccine sales is just uncertainty over U.S. federal government policy.
Yeah, that's right. I think there's coming out of COVID, I think there is less interest in kind of coming from the Trump administration as well, from a top-down kind of mandates of the vaccine. But what I would say is that Moderna is combining, COVID with the flu vaccine. That could get some traction in the next few years. Having another asset to combine with that has more of a normal, like annual sort of seasonal component to it.
And broadly speaking, Moderna, if you were to compare Moderna to, say, Pfizer or Merck, is there something very distinctive about this company?
What I would say is again, coming out of COVID, the platform was hugely prolific. And they were the only company, them and Pfizer, BioNTech, to deliver, massive number of units, for COVID. But I think the challenge is the encore, right? So, I mean, one of their peers, BioNTech, has moved into oncology in a major way and has seen much more meaningful, much higher valuation. So Moderna is still in that, kind of phase where they're moving to oncology and rare diseases, which I think will be real positive. But I mean, they're still in that transition phase.
Of course, America, the world, has been trying to defeat cancer for a century or more. Cancer, of course, a disease, multifaceted. It's not just one ailment. Is there something distinctive about the oncology market? Is it tricky to enter, for example?
It's not tricky to enter, but I would say the drugs are very good. The immunotherapies sort of reprogram the immune system to recognize the tumor. That includes a lot of the IO, kind of components with Merck and Bristol, for example. I'd say Moderna's platform could be additive to that, but there are lots of other innovations across the oncology field, antibody drug conjugates, cellular therapies that, so it's a crowded market, but it's promising given that we had some real disruption and some meaningful changes. But I would characterize the mRNA platform, when added to PD-1s like a Keytruda for Merck as being not quite synergistic, but maybe additive for sure.
Thanks very much indeed for joining us, Geoff.
Thank you.
Geoff Meacham, Managing Director of Biotech Pharma Equity Research at Citi.